all that you really needed to know when it comes to the Bharti Airtel numbers. Well, all that you need to know about what to do with the stock, Mayuresh Joshi will tell us. Mayuresh, good having you. Thanks so much for joining in. We don't keep you 5-hour webinars, Mayuresh, so don't worry. We'll keep you for about 30-45 minutes. But tell us, Mayuresh, let's start off with Bharti first, since you're on the topic, then get to the markets. So what did you make of the quarterly performance? The stock has been under pressure in the last 2 or 3 sessions. Do you think this released that pressure?
Morning, Neeraj. Oh, absolutely. I mean, 5 hours was a marathon last Saturday, Neeraj. Yeah, and I love being on your shows. So having said that, I think the operating performance was very exceptional. I think if you probably look at the India wireless business at this point of time, the ARPUs at 154, I mean, it's one of the best performances so far. And having said that, when you probably look at history again, Neeraj, I think ARPUs were far higher even from the current levels. So if you probably look at how the industry is placed at this point of time, and even if one assumes and presumes that Vodafone Idea, for example, will still continue its operation at this point of time, they need to take substantial hikes from the 130, 135 ARPUs that they are reporting. So I think the presumptions that analysts are making on the street is that over the next few quarters, as more and more data packs gets bundled up on the higher side, as you're seeing the transition happening towards the 4G database in terms of more and more subscribers getting added, and look at the consumption in terms of data. I think if work from home and the readjustments thereof is supposed to be a new normal, I think the ARPU increases because of both these factors. I think the India wireless business should hold up very strongly. So the assumptions of 185, 190 odd rupees will take Bharti's EBITDA quite significantly higher from the current level. The second is the enterprise business, which is held up, and the African business as well. I think there has been a strong show in performance on that one. Considering all this and the cash flows, I think the net debt to EBITDA at 2.9 times still looks very reasonable, considering the environment that we are in. So in a landscape, I think Bharti, I think very strongly placed. I think the stock will show very strong outperformance in today's trade. As I've always maintained, I think anybody holding on to the stock should continue.
Okay. Well, this has been a very interesting performance by Bharti Airtel, and mind you, as I think Somit stated as well, the highest revenue jump in last 30 quarters, highest ARPU in the last 12 quarters, and quarter-on-quarter ARPU growth better than Jio's quarter-on-quarter ARPU growth as well. The 4G subscriber addition too looking very strong. So that promises to be a stock of the day. The problem, Mayuresh, is the markets. We may start off higher as well. Would you reckon there'll be selling pressure?
Now again, I think, as I said, I think we are going through 3 phases, right? So the first phase was the shock phase that we saw in the month of March for not just our markets, but for global markets as well. Clearly, I think this phase that we are going through is the adjustment phase for the next few weeks and months. I think we will be adjusting to what news gets thrown at us. A vaccine gets developed. I mean, the development of a vaccine in various stages, I think the markets are going to react positively to that news. What happens in terms of the US-China tariffs or trade wars if they start flaring up again? We've recently heard, or I was just reading media reports in terms of retaliation, in terms of the Chinese government across a lot of economies in terms of either hiking import tariffs or probably having some say in terms of banning goods altogether. So I think what kind of upheavals do we see in this adjustment phase is going to create huge volatility for the markets. And analysts have pegged in a higher single-digit decline from an earnings perspective. Now the reality phase will creep in Q3 when the actual numbers get adjusted in terms of the estimated numbers at the beginning of the year. And that's where I think the major readjustment will happen on a real scale. So my own sense is that the volatility might very well continue, Neeraj, for our markets. I think 8,800 as I've maintained, and 9,400, 9,500. I think that's a very broad range, but that's how the volatility is playing out.
Okay, Nikki, thanks so much. We'll watch out for those. Actually, coming on that one, Mayuresh, we'll talk about Vedanta in a bit, but AU Small Finance Bank, since we are continuing this telecom stroke market discussion, Sunil Bharti Mittal Holdings buys a small stake the day before yesterday. Government of Singapore buys some small stake yesterday. The promoter is seller in both the entities, and there is a connection that we know between Bharti and Singapore government any which ways. How do you read into this?
So a couple of aspects here, Neeraj. I think marquee investors are getting into this stock at the behest of the promoter probably selling out to them. So I think institutional holding ramping up, I think that's a very good sign, and diversified at that one as well. The second element obviously is that how is this stacked up in terms of both its peers and the universe that it is operating out of. That is very, very patchy at this point of time. You're not really sure in terms of how disbursements will pick up even once the lockdown is probably lifted out across tier 4, tier 3, tier 4 cities, which is started to happen. But what is the quantum of disbursements that will go through? The second element is in terms of a lot of moratoriums that have already been announced by a lot of public sector banks, which will have to undertake the package that have got announced to MSMEs, the new definition that has also come through. And the third element itself in terms of delinquency issues as well. So what happens in terms of the collection efficiency itself for all these players and the provisioning required if asset quality probably stays at lower levels. I think those are the medium-term concerns that the street will probably looking out for. So yeah, I think market investors getting in, good sign. But again, I think they are in with a longer time horizon. I think you probably need to at least wait out for the next few weeks or wait out for Q1 numbers and see how the environment is shaping up before one takes a call of these stocks. So I've always maintained, again, I think over the last few weeks and months, that I think it's better off staying away from this pack, whether it's NBFCs or the financials at this point of time. I think let the confidence come through in terms of the stability of the economic parameters coming up and numbers showing up on their balance sheets and the management's exhibiting that as well before we get into these stocks. I don't mind missing, as I said, missing out a 15-20% rally. But the confidence, if it comes to numbers, I think that will sustain my belief that the resilience will be here to stay.
Mayuresh, a couple of numbers really. We're waiting, of course, Bajaj Finance numbers today, by the way, mind you, and that could be an interesting trigger for the stock, what they say and what they deliver. The delivery is one thing, but what they mention about how the first 2 months of this quarter have been could well give a trigger for the stock going ahead. But Mayuresh, what I want to talk about to you is Vedanta. What's your thought here? Yesterday, on expected lines, the delisting approved. Now the reverse book building starts. What would you do if you were a shareholder?
Very tricky one, Neeraj, at this one. Because again, I think from the promoter angle, look at the kind of debt that they've got on their parent Vedanta Resources, $1.9 billion in terms of debt. So I think they have to also have a very, very prudent view in terms of what they are offering to shareholders and the kind of pile that they can actually give off in terms of the buyout. So that's point number one. So I think the what Nikki was mentioning in terms of the reverse book building and the discovery price, I think the offer of 87 is still below the current market price at this point of time. So I think it's a very, very difficult and a very, very tricky situation. A, I don't hold Vedanta. B, we've not recommended Vedanta. So clearly, I think not in my league at this point of time.
Okay, Mayuresh, the other one is the results that we saw, and just wondering, did you have a chance to see the Torrent Power numbers? There was a loss number, but the margin performance was strong and the sector is looking slightly more buoyant right now.
Could not see the numbers, Neeraj, because there was too many numbers flowing through and too many numbers expected today. But if you look at the business model itself, I think if you're looking at the utilization levels ramping up, one of its key plants is still not having sufficient number of orders. Therefore, I think the fixed cost absorption and the plant load factors are absolutely very, very minimal at this point of time. The second element is that they do depend a lot in terms of LNG, in terms of their input costs. Now, with LNG prices, which have come down so significantly, and even if you probably assume recalibrations being done from our own importers as well, the FOB price, and that's what I was looking out for over the weekend, even from the American suppliers, with an FOB and the increase and the expected landed cost in India, I think that still will not exceed $5.2. So I think that is even significantly lower than the contracted cost that they've done. So yes, I think there is significant amount of traction that can be done. A couple of their plants, Bhiwandi and the other one as well, I think the 18C losses, I think they have started coming off. And with the implementation of smart meters, so on and so forth, I think if both these factors work through, along with the third plant actually getting a lot of orders in the coming few weeks, with the entire rationalization happening of 90,000 crores given to discoms and some clarity in terms of receivables actually getting freed up, I think there you can see some possible traction in terms of generators like Torrent Power. So I think there is a good business sense at this point of time. But sorry, I think I did not look at the numbers.
Mayuresh, a lot of people might get caught in stocks like Jubilant Life, and that's what I'm asking you. I mean, is it a stock worth buying? It had a 3 or 4 days of an uptake, the Gilead news, etc. Now getting sold into.
Obviously, I think the news was very, very positive, but one must remember, I think that it is one of the 5 drug makers that have probably got allocated the remdesivir approval to manufacture the same. Cipla, among the large cap players, is also one of the drugs. And apparently there is one more one more Asian country involved as well. The second element, obviously, is the operational performance of Jubilant Life till this point of time. I think it's been an okay performance, assuming the business models and segments that they are in. And a couple of plants, and what probably happens in terms of the resolutions thereof, which is expected to also take place over the next few quarters or months. I think that can have a positive impact as well. So yes, I think the positivity did play off, but I think one must understand that whatever comes through, I think it's going to take time. So I think the street is now, again, as I said, in that phase where it's trying to recalibrate that yes, earnings will come through once the production number starts, so on and so forth, but they will get reflected from Q3, Q4, or even after that. So yeah, I think the street has probably taken that as a picture. So.
At the broader end of the spectrum, Mayuresh, let's say you have some of these NBFC names which crack big time. M&M Financial, Chola Finance, Shriram Transport, Example Housing Finance. In this small burst that you might have today, would you get out of these names?
Yeah, so instead of getting out, I will not probably get in, Neeraj. And the logic is very, very clear, right? So FY21 from an earnings perspective for these NBFCs is going to be a washout year. So I think we've discussed this ad nauseum in the past. I think advances growth is expected to be soft. Look at the expected delinquencies because of the moratoriums that can actually happen and get translated onto their balance sheet numbers as well. So there is no surety or shorty in terms of how many of these numbers actually go bust in the coming few quarters. Yes, lifelines have been given through in terms of additional lending facilities from the banking side for a lot of these beaten down sectors. But is it sufficient enough to probably help them tide over the working capital issues, and will demand actually come back in the manner that it has to probably bail them out in the next 2 quarters as well? So I think all these questions need to be answered at this point of time. Their dependency in terms of borrowing of funds and the quality names within this space itself, yes, they might be a little bit better off in terms of access to the bond markets because of their AAA rating and the interest rate, which probably is a little bit lesser compared to the unrated paper that the other NBFCs have. However, I think the overall pain from a balance sheet perspective still continues. So I'll stay away. I think I'm not rushing into buying NBFCs at this point of time.
Mayuresh, we know that you've been bullish on pharma and specialty chemicals. Anything else that you are even remotely bullish on, or are you bearish at large?
No, so I think out of all the numbers that got reported, I think a couple of companies did stand out. Yes, I think they've been going through a tough transition. Escorts, for example, I think the operating performance was very, very good. Again, if you look at the management call and the transcript thereof, they are assuming that as the utilization levels start ramping up from the 25-30% that they're probably seeing, and as the inventory across their dealer end starts getting off the books, because it might have already happened because of the Kharif season being starting and the monsoons coming off, they're expecting strong numbers to come through. The railway business is holding up, as is the construction equipment business, which can have a huge ramp up as infrastructure spending starts moving higher from the second half, which can get translated into overall SOTP numbers actually moving up. So I think Escorts had a good set of numbers. And if you're probably looking at business transitions, I think Indiamart Nivesh, I think it's very, very strongly placed at this point of time. I think the overall online tsunami that is expected to happen, and the kind of buyers and suppliers that they probably have, the stickiness thereof, the numbers that they posted, 700 odd crores in terms of top line, the kind of cash that they've probably got on their book at this point of time. I think this is one model that can still survive the times to come over the next few quarters as well. So I think 2 good set of numbers in my opinion in the broader markets.